Hi friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. And this is analysis for May 11th, Wednesday 2022. We had a very weak Nifty. We had a weak market today. It ended up as indecisive, indication, and basically it fell under the selling pressure today. That's what happened. Right? Let's see more details in the charts. So this is the Nifty chart, daily on the left side and Banknifty on the right side. So clearly you can see a gap resistance here. Window gap resistance is there here. And look at the last candle today that was formed. It's a gravestone doji. Gravestone doji is clearly bearish, and it indicates the selling pressure from the top. But it could be more powerful if it is appearing on a trend, trending up move. That is where it becomes powerful. But look at the wick size. Clearly indicates that the bears are trying to kill. That's exactly what is happening. But look at Banknifty. There is a contra. It had managed to close green, but it could not take over the resistance of the window gap. I always say that the window gaps are powerful resistance and supports, right? Because that shows the intensity of the bearishness or the bullishness that has happened, right? So it is a green move. The Banknifty gained some points, and but we have the resistance here, right? That resistance is a key thing, right? Now, are we going to break down, or are we going to stay here, consolidate? Looks like it may try to retrace this previous swing low out here on the Nifty and out here on the Banknifty. That's near to 32,000, and this is nearly to 15,650 kind of levels, right? So it could consolidate here, and then after some time could fall back and retest and then take a support here or breach it. Or everything is possible. We just can't predict, right? As of now, there is an indication that it is not wanting to go down too much, right? Even if it wants to go down, it will go in its own pace. Because look at this, three candles, so it's giving an indication that it doesn't want to go down. So Banknifty is showing some kind of strength today, right? So look at this, another view of the Nifty and the Banknifty. You had a great support, and we had moved up, breaking out of a flag pattern, and then we fell back into the same channel, same place where we had broken down, and now it has given up all the moving average supports, and now it's struggling to climb up the gap that it had created by its own, right? Banknifty on the same, it also has got a neckline breach of a head and shoulder and a double top pattern similar to the Nifty, and it has reached all the supports and then now struggling to come back is what we can see. It is at a very good support level of 34,000 levels, and even Nifty is also a support. Nifty, the good support is coming still further down at 1500 levels, but Banknifty right now it's a very support. 34,000 is very, if that's breached, most likely it can go to 32 kind of previous swing low kind of levels it can go. So Banknifty has very good support zone, so there is possible that it can end up the business there and then have a mini swing, and then it can move up. But our charts and the charts are clearly showing that it is bearishness that is happening. The sliding down move is what you see. So we don't know whether the Banknifty's today's attempt to move up or attempt to stay afloat short-lived, or whether it will continue or not. But clear bullishness was evident there. So basically it was a flat day for the Nifty, right? We just lost 62 points only, right? It was a gravestone doji that is in this and bearish, and other things we already discussed. That it's a downline trend line move, and after a failed flag breakout, and also it also has a neckline breach that has happened. We had seen yesterday. So Nifty had gained 200 points. So whatever Nifty has lost, Banknifty has gained 207 points gained, and it's formed an inverted candle. An opposite low is also bullish candle. The open price is equal to the low of the candle. So that is kind of bullish for the Banknifty. So intraday price action, if you see, this is what happened, right? It was consolidation between the 150 points, and then the last two candles it just breached. So Banknifty, on the other hand, was trying to climb up and it gained 1.5%, but gave 1% the last three candles. So that's what happened in the intraday. Bollinger Bands are showing that it's clear bearishness, and it's a band expansion. Is walking on the bands on the downside, right? And volatility is evident because the distance from the median is too much. Support resistance levels, you can see that there is clear resistance of the gap here, another resistance of the gap here on top, and also two resistance on the upside. So right now support 16200 is what you can get. If it falls down, then 15, 850, 950, 16 it's very crucial. The breach of that will lead that to 15,550, 650, and then 15,350, 450. This previous swing low kind of levels and below. So resistance on the upside would start at the 16,350, 16,450, which is Fibonacci 50 retracement level where it got hit and then fall down. After that, you have the gap, which is 16,550, 16,650, and above that 16,700 to 16,750, then 16,800 to 16,900. So Fibonacci 38. Then 13,000 rounding number is there. Above that 17,200, 300, then 17,350, 400, and then 17,500, 600, which is Fibonacci 23 retracement level. That's Nifty. Those are the levels. Banknifty right now the support seen is 33,600, 34,100, Fibonacci 61. We went a little closer to that and almost breached that also. So 34,000 is going to be a very good support. Below that you have support at 32,400. 34,000 would be a great support. Below that you have 32,400 to 32,800 support, and then 31,800 to 32,000 kind of support, which is the previous swing low, right? So that's support downside. So similar resistance will be seen at 34,350 to 34,700, then 35,000 nearby levels of Fibonacci 50, and then above that 35,600 to 35,900, then 36,300 to 36,800, which is Fibonacci 38, and above that you have another gap, and that is 37,000 nearby range, and above that you have 37,500, which is Fibonacci 23. Climb above that would indicate some strong rally that can come in. So in a nutshell, Nifty, the ranges that you have to closely watch is first is 15,950, then after that the previous swing low at the 15,650, that levels, right? And upside you have to watch whether this gap can be taken out first, and then the consistent close can be seen at 16,800, 900 Fibonacci levels, then 17,500, then above that 18,350. That's how it goes. And Nifty similarly 34,000 is a good indication. 32 is next below downside. Above similarly it will be 30 first gap, clearing this gap of 35,500 levels, and then 37,500 levels, and above that 39,400 is the rally beginning area. So that's the support resistances that you can see on the Nifty and the Banknifty. Momentum, if you see in its bearish zones clearly on the short term on both the indices Nifty and Banknifty, it's clearly evident that bearishness is increasing. But the only good thing that is left is that momentum is not breached on the weekly basis. It is still in the sideways. It has not gone to the bear zones yet. Right. So that's momentum short-term bearish trend, both medium term and short term. The trend is clearly bearish and it is rising that bearishness. Right. That's what you see in medium term as well as short term on both the indices Nifty and Banknifty. That's what you're seeing here. The strength of that is increasing. Right, strength of the bearishness trend. Now India VIX has again spiked a little more, 1.2, and it has become 22.3. Implied volatility on the Nifty is 21.83. Implied volatility percentage is also very high on a 52-week basis. It's 88.76. So it's clear, great fear is there in the market is very evident, and it's about to do. You just have to stay away from the market if you're not a professional trader, right, and hedge your positions if you don't want to play in the derivatives and options and all that, right? So volatility is on the peak, you have to be cautious. Open interest analysis is for the expiry day after tomorrow. Overall, you can see the highest number of writing is happening in the call side, so it's bearish. You can be evident. Put call ratio is closer to bearishness, 0.59, 0.6, but not to the end of 0.4 kind of levels. But 0.7 also is closer to bearishness, only not to bullishness, Banknifty. But long build is what happened in the futures open interest today. And short build-up is what happened in the Nifty on the futures open interest. So options open interest levels at 16,000 and 17,000, which is 1,000 point range. Then where the highest for put and call writing is seen support and resistance. 15,500 and 16,500 is where the second level of support and resistance is. written by the call writers. 34,000 and 36,000 for the Banknifty highest put and call writing is seen. 34,500 and 35,000 is where the second highest number of put and call options can be seen to be written. Right. So that's about. So there is some call unwinding is happening on the OTM options. Some call unwinding, some unwinding on the put side OTM also. Some additional add up also is happening. So things are not very clear. It's a 1,000 point and 2,000 point range that we are talking about. Still just 1 day or 2 days. So it's volatile. The writers are seeing that it can be highly volatile. That's why they have given so much of range. Among the strikes, right? So that's the open interest. And look at this heat map. We had some greens on the HDFC and the HDFC twins, HDFC Bank. Both of them performed today. Kodak Bank also performed today. There is clear in this Sunday or ITC. ITC did not do well, but green is in the the FMCG sector as such as some green is there. But sector wise, if you see, all the sectors did not perform except some media or something, right? So HDFC twins did well. That must have what held the Banknifty up. So HDFC Bank, you can see that it is at a major support zone and it's trying to consolidate there. It is almost going into sideways from the bearish zones. So some consolidation, a lot of resistance on the upside. HDFC twin also green day climbed into the sideways momentum area. Reliance, the bearishness continues. All the breakout gains from the flag is given up now. It is almost ended in the bearish zones in the short term, and trend also has closed out to the bearish zone. So all of a sudden, the biggest heavyweight Reliance seems to be not holding the market at a crucial stage, while HDFC is kind of doing that even after getting beaten up. So whatever buying is happening from the section must be in the HDFC Bank is what you assume. Infosys, you can see that it's at a support zone. There is clear consolidation that is seen. It is climbing the sideways momentum. And remember, there is a big resistance window, resistance that it has to climb if it has to go back to the bullish zone. TCS has fallen, is also a green close today, IT, and because of the dollar rise might have performed today, and it seems to be a major support zone. TCS has got this support zone that is long being held, and once again it has retested that, and then it's trying to be in the sideways zone of momentum. So consolidation may be the game. ICICI Bank showing some greenery today after it slipped to the momentum in the bearish zones, and then it has slipped from a major support zone also. So another support is there, it is very close to that, and also we have some ascending pattern breakout that had happened, that could act as support zone also. So a lot of support downside, but we'll have to see whether it's going to consolidate here or is going to climb back the distance that it has given. So, but momentum has slipped slightly in the bearish zone, so that size is the end. Kotak Bank is showing green. It's at a major support zone. It's a sideways momentum and it is hovering between retesting this support zone multiple times, right? Multiple 6, 7, 8, 9 times in the recent times, and then but the thing is it is bouncing up but not bouncing beyond a certain level. So it's sideways price action is what you see clearly in, but on a swing basis, right? On a multiple day basis, it's a consolidation sideways price action is what you see. But today it had a green day. The momentum was rising, but momentum still remain within the sideways range basically. So that's the index heavyweights. None of them are HDFC. None of the index heavyweights are performing as such. All of them are trying to not to fall into this bearish momentum is what we can understand. So total performance, if you see, it was a down day, almost. IT went 1% down, metal went 5% down. There is a big bearishness that you can see in the metals. Auto went flat. Pharma went 1.5% off, FMCG 0.5% up, reality 3% down. So reality and metal big down moves, 5% and 3%, and all IT also is down, but only sector auto and for FMCG is what is holding up, and FMCG is holding on, that has moved up a little bit, 0.5% up. Pharma is also bearish. So all sectors, major sectors are bearish except auto and FMCG, which is managing to be in sideways zone, so momentum zone. Institutional data for today has not come, but look at the institutional selling that has happened yesterday. 3,000 crore, 5,000 crore, 2,000 crore. That's kind of selling that has happened, and The DAs are trying their best to buy in and catch up with the FI selling. Today also same thing might have happened. FI might have sold a lot. If the data is not yet, we'll have to wait. We'll just quickly check if it has come or not. If it has come, you can see. Yes, 10 it has come. So nearly 3,960 crores of selling has happened from the FIs and nearly 3,000 crores of buying has happened from the FI. So the selling spree FIS continues and the DIS do exactly the counter and supports the markets, and then the long-term investors, retailers, people who put money in the mutual funds and all that. So that money is still confident on the growth of India, is what we can understand from markets not ready to fall. Even when the big sellings happen from the FIS market, keeps the faith, right? That's what is happening. Now currency, that's where the big thing is happening. Like all-time high is hit today. There is some cool off that has happened, but very high momentum. Rupees weakened to the core, about 75, 77.33 is what the rates are there today. Dollar index also is broken out of it. Kind of 2-decade, 20-year highs where the US dollar current US dollar index is there. So no wonder that USD INR currency pair is about 77. So that's the kind of thing. Rupees weakened to the core. It's not that great, but look at Dow Jones, US markets. Another hawkish bearish thing is what you see on the bearishness is very evident now, very evident when the major support zones are all breached, and then it's looking for the next level of support on the downside. Momentum has slipped in the bearish zones, trend is bearish. So we just have so it looks like the bear market is what we are seeing from all the US indices based on the S&P 500 on top here, and then the S&P 500 on the bottom here, and the Nasdaq. All of them have slipped, even about the consolidation that has been happening since several months now. Right, this levels of support that is marked here in the rose color has been a major support which just held since long. Now it's gone. Now this lower low is what is getting formed. Right? Price action is indicating bearishness, momentum is indicating bearishness, trend is indicating bearishness, support resistance levels are showing bearishness in US markets. US market is a mother market. Any bearishness there would obviously reflect there is no way that we can hold on for further without correcting ourselves deep, right? Crude is cooled up a little bit, still at 100, not below it yet, but cool up has happened with crude after a long time. Basically, it's kind of consolidation that has been happening since several days. If you see, right, from the 120 kind of levels where it shot a few months back, now it is slowly reducing the range and then try to settle at the 100-point kind of level is what you can understand. But even at 100, it's not a great price for the crude. Comparing that, it may have been 60, 70 levels in very recent times. Right? Now we are seeing 100 is not that, but at least a cool up has happened now. So gold is still in the bearish zones in the short term. It is unable to hold the support zone. This you're seeing it as a resistance now. Remember this top support zone is from where it had attempted 2 times to make another new all-time high. It has not happened. Now there is a bullishness, more divergence bullish. A divergence that can be clearly seen here with the momentum is rising up and the price is falling. So if that works out, it could get into the sideways zone, and then so it looks like it may get into the consolidation mode at the same place and will not fall further down. Is what it indicates as of now. Charts on the daily. 2 action numbers Mahadar gas. It's because the trend, the bearishness is evident on the daily charts. The trend indicator is showing bearishness, and the price pattern is in a trend line channel that is sliding down, and it could give a swing trade till this support zone. So that is where you have to come out of the trade. Right? It's a parallel channel, and this support zone, if breached, means it will be major bearishness. But this support is a very good support. Seems like a long support, so it may consolidate at this point. So take a book a profit at the support, that is 680 and 740. 100 points are there. It's only for short term, 1 or 2 days of trade. HDFC Asset Management again is showing bearishness. It's in a trend line down moving channel. Bearishness is evident on the daily. Trend is evident. Price action is down falling. So it could give swing trades. Definitely. Right? It may be overvalued also is what it looks like. So HDFC asset management, and Mahanagar Gas. So to wrap up, moderate bearish is what my view. So basically, this slide I didn't have to change anything at all because nothing has happened today. All it happened was it just went flat on Nifty and then slightly moved up and gave up half of it, most of it on Banknifty. Nothing much has happened. So we are where we are, right? All that we know that we are sliding with in between, right? So it's bearishness in the short term based on the chart patterns and all these parameters on momentum, bearish in the trend, Bollinger Bands. All of this indicates for a different perspective that the market is bearish, right? So obviously, and it could form, and new swing low can be, there is every chance that it can form price action. If you notice, there's every chance that it can retest the previous swing low definitely, or even breach that also. You never know. And globally also, our interest rates are hiked. US market interest rates are hiked. Those stock markets are bearish. Inflation is at 50-year high, and rupees at all-time high, and rupees at all-time low levels. US dollar is spiking 20-year high. So there is bearishness all around, and crude is also at still above 100, and all the global cues on the war and all this is happening. Volatility spiking up about 22. So so if I was selling 4,000 crores per day at so that's the kind of selling that is happening. So VIX is 22. So positive factors are very little only, except that DAs are buying. Even every dip that is coming down, DAs are buying heavily to support the market. So that's what is evident. So levels we already discussed: 17,500, 37,500, 18,350, 39,400 on the upside, 5,932 is the crucial place that we will have to keep a watch whether it's going to breach, and how far from there it will breach is what would determine the bearishness intensity, right? So always hedge overnight. You can portions can get wiped out if you're not hedged it properly. If your risks are not defined, if stop losses are not put, then you're dead. Especially if you're playing options, and always use option strategies like vertical counter spreads and non-directional strategies. Everything protect your capital. So it's a view is of moderate bearishness for the short term, and your view may differ. There is always chance for a small bounce up or consolidations to happen, but overall the trend and momentum, everything is indicating that it's bearishness market. That's what the view has to be. So you may differ based on all these parameters that you study. Your view could end up to something else, but it's okay. Stick to your view and then plan your trade with hedge positions. That's all you can do to manage your risk and reduce your position size with the spike in the VIX happens, right? So hope it helps in some way. If it helps you, and if you like it, consider the like button, subscribe if you're not done that, share, put in your comments, feedback, and share it to maximum. We have very few subscriptions. Appreciate your help in this regard. Thanks a lot for watching. Happy trading, happy learning. Bye bye.